All right, let's go over the markets. We'll go over ES, crude, and gold. All right. So as I said over here, that the market is in a very is in a position where it can reverse at any time. Why? If you take a look at the daily chart. You see this, the breakout bar. You have 18 times. I don't know. I think it's 18 million. Let's see, 100,000 with an 18. So I think it's 1.8 million contracts traded here. So that anyway. So now the market's going into that same area, right? So now it's going to have wicked reversals because they they don't accumulate all at once. You know, they accumulate little by little, not little by little, but at different prices. So right here is a support level, and we're in that breakout area. So you can expect violent reversals. And in any case, right now this internal trend is this pullback trend is still down. Okay, so just remember that though, you don't take longs until until it reverses, right? So we have this this damage over here: 113, 20, 17, 48, 63, 40, 28. The reversal here is on 39. So 39 times 10,000. I'll just call it 39. So 39 over here. All right. So down over here now this I don't really see it as a change of behavior. I mean, I don't really see it as that much volume to do an entire change of behavior, right? So I think it's going to continue down. So internal trend continues down until there's a reversal, but it can happen at any time. It might spring into it or whatever. All we know is that it's 39, right? So it's actually 390,000, but whatever. So but there's going to be violent reversals like on the upside because it's coming back down to those levels. And basically I'll show you where they last accumulated was right here. This was where they last accumulated, and then it created a bounce. Look what happened when they tested this area. See? Take out the shorts. So you see that move was specifically take out these guys because they know that the people are going short because they know that the trend hasn't changed yet, right? So that's what's going on right here. So you just have to be you just have to know how to move stops, and I mean that's about it. Okay, so the trades, how is it? Okay, so 830 here. Yeah, I don't know what happened, but over here there's some accumulation. It went up, so people were looking for the pullback, right? Initial area of the pullback, possible pullback, was right here. But the market, if you were long, right, you would consider this. It comes back to an average, comes back to a quote unquote zone. What do you call it? Demand zone or some, demand zone or block, right? Because there's some absorption or whatever above this high right here, reaccumulation to go higher. So it taps that area, goes up once, goes up twice, but not enough juice. Why? Because, well, who cares why? But this is actually the breakdown bar here on the 5-minute. It couldn't get above that area. It broke, and this thing had such a chance of going to the 45.10 that, if you short right here, I got in somewhere around here because I knew that the longs would not. I don't know why I thought that, but I don't remember. And the short was good. It was good, and it was so close to one more rally or wave attempt it would have gone in, but then they came in and did a break even. So the point here is that happens. You can't really you don't really know, right? Because that just happens sometimes. But who cares? So let's go into a couple of things. First thing I want to point out is something. First thing is this: a lot of traders, and this is really for Wyckoff traders, right? When you guys are looking at charts, whether it's daily or intraday, what do? You look for behavior, right? Behavior, and what I mean by that is your climaxes and that change of behavior and that effort reward, all of that. So this is, and especially, this is actually a mistake. If you look at this climaxes, change of behavior, effort reward, and why it's a mistake is because it's on one time frame. All right, so what this will result in feathers weight and all that. So, and then whatever breakouts, right? Remember, market is two-sided, and if this is the first thing that, in my opinion, like just observation here, looking at any one time frame and trying to identify this is more of a learning activity. It's going to be real hard to trade this way because of the market structure, the way it moves. The market moves like that, right? So you're going to have all of these behaviors on this side as well as other sides. So my point here is that, and remember this, if you get this right, you'll see what happens. The trend overcomes behavior. Behavior, or whatever, the schematics or whatever you want to call it. Trend, higher time frame trends overcome any behavior. Trend comes first, creates the context, and then it's like this. Trend, and then within it, you look for behavior. All right, so meaning the trend first and then behavior within it. If you do it quote unquote objectively by looking at behavior here or there, it'll just lead to massive confusion and losses. In fact, the consequence of doing it of not doing it this way will be a high loss rate. High loss rate. So how do you do this? I know it sounds simple, oh, trend, blah, 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 but believe me, 90% who get all of the high losses rate, this is the reason. And it's just an observation that this is what's really going on. So this, I'm just showing you how to overtake this, like how to deal with this. You basically use 3 time frames. A higher time frame is direction. Medium time frame is signal. Lower time frame is entry. And you always trade in this direction. And what happens is, basically the higher and the middle time frame, they go against each other. And what I mean by that is, you'll have this situation where it's an uptrend, right? And let's just analyze this leg. This leg, right, let's say this is your higher time frame. Right? And this is your lower time, medium time frame. This leg here is going to look like this. Okay? Do not go short. Instead, be ready to go long. Be ready to go long. Do not go short. Why? Your risk reward strategy will not pan out. If it's this you might get 2 to 1, maybe. Okay, and there's upthrust like crazy over here because these guys are accumulating the pullback, so it just leads to losses. Anyway, so so what you want to do now, notice this is going up and this is going down, right? Now, what do you call that? When the high time frame is going up and the lower time frame is going down during a pullback, this is your diversion. Okay? This is your diversion. So, eventually what happens is it will change. Trend will change. Now, there is no diversion. Okay, so the pullback between high time frame and middle time frame, the pullback, it doesn't impact the high time frame obviously, but the middle time frame changes trend. So you have an uptrend on one time frame and you have a downtrend on the other. That is your diversion. Okay, if you want to compare time frames and say, okay, one is going up, the other one's going down, when they're back into alignment, there is no diversion, and here you have uptrend. Now this guy, the upper and the middle, are now in the same, are in alignment. Now, when this thing comes back, you can use a lower time frame to enter. Now, what happens on the lower time frame is the same thing that's happening on the higher and middle, but here would be middle and here would be lower. Now all three are in alignment, and that is going to be a good continuation. And there's some things about risk as well, where you can minimize, get a very low risk, what they call sniper entry, or very close to, it's just a big reward, all right? That's all it is. Low risk, big reward. So this is what I'm trying to explain. So the point of this lesson is, one, trend overcomes behavior. Looking at behavior first and foremost is incorrect, at least for intraday trend trading. That's just an observation or an opinion. But looking at behavior from a lot of experience is only going to get you in trouble. All right, because we know that a lot of patterns are random, and basically 1, 2, 3 bar behavior is nothing. 4 bar behavior is nothing compared to all the bars in the day. It is a very small sample. So even the volume on them. So one, trend overcomes behavior. It's very easy to say, oh, don't counter trend and go with the trend, but it's very hard to do. And typically that's because of the scalper mindset, and more importantly, because of FOMO, because of the impact of psychology and the limitation of trying to trade only one market. When you're at your desk for that long and you just see a counter trend, and all day it's only going in that counter move, you're going to take it because of FOMO, because of the limitation of trading only one market. These two together, they will basically ensure that you lose. Right? So you need to be able, in my opinion, like you can jump to another market, like crude or gold, and see if they're aligned, if their stuff is aligned. The experience is that if you do it the other way, where you just look at behavior, look at all this other crap, it just leads to very random rewards. It's not it's not going to work. I don't know how else to say it. All right, so anyway, let's put this away. So we see that, again, this trend here, this is what I'm trading. Of course, the major time frame is still up, but this is the one I'm trading. So 1, 2, 3, higher, medium, lower. And anyway, so this one here, it gave a good opportunity. Like, it was a low risk and went beyond 2R, but it just didn't go to the target. And these guys came in because of this damn accumulation brick right here. But they, you know, did that, but it's fine. All right, the trend is still down over here. Yeah, last one is like, what is it, like 390,000? I think so. 390,000 on this. Nothing really telling me too much, right? You notice that you had 1.9 million contracts and 1.7 million traded today. 1.7, the breakout here was 1.8 million contracts. Probably better to take a look at the SPY, because SPY actually is, in my opinion, is clearer volume to understand than this ES. Anyway, so ES, whatever. I think I've beaten this horse to death. So let's move on to the next market. Okay, so again, sells, right? So this gold, you see it's on sells, sell, right? So when it goes and buys, it is diverging. Get it? It is diverging when you go and buys and you do not enter. Your risk, look at the reward, it's shit. If I got in here, I mean, look at this, it's nothing. So now it's back on sells, which means what? They're not diverging. Sells and sells, now you can get the next cycle down. And now it's initiating the next cycle. Look, it's going from this white, diverging whatever, to this red. And we'll see what happens. But right now, the trend is down. Okay. What was the opportunity here? I don't really recall, but I attempted something here, and I think it was a break even. It was a break even, and just don't recall. Where did I get in? Yeah, I don't know, somewhere, but it just, the stop was too close, and it just did a break even. So, oh well. Now, this is a sell, and you have a little base in the background. You see this entire block? You have 1, 2, 3, 4, 5, 6. Takes out, not bad. Yeah, I don't know. That one right there. I mean, this looks like a nice break. Let's see. The volume is good. No, it's not that great. It's biggest in seven down bars. I guess okay. And now let's see if they'll probably take out the low, Friday low. All right, let's move on to the next. All right, so this is really important. Like what is it? This market, crude. You want to see if they reestablish trend. Very important to see if they reestablish trend, because a mega opportunity for the next wave up is going to occur, right? Because they did the lower low and took out these lows. It just went to the support area, and this, I would say, it's on sells. But now look at the reversal. It took it out, so it's going to go back on buys. And if it goes back on buys, look for buys. So we just wait for it. Did all of this, and he has some effort at the end. Now we'll see how the pullbacks fare, and see if there's any opportunities. All right, that's all, folks. Take care.